This is a recording of a trade that I took yesterday, Tuesday the 24th of September 2024, in the euro dollar. I am narrating this after the fact because I simply pressed record at the time and just carried on with what I was doing. So on the bottom left hand side of the screen you can see the hourly chart of the euro dollar. In the top left of the screen you can see the calendar and the news flow that was coming out yesterday. And on the right hand side of the screen you can see my plan, which is a really important part of my process, and you can see the rationale for the trade has been written down ahead of time. Now, we did cover this in last night's session, but just to recap why I was trying to buy this. If you look at the market breakdown heading, you'll see that from a weekly time frame perspective I was bullish because we were reacting from the high of a weekly hammer. From the daily time frame perspective I was bullish because of the high probability of a return to the weekly open, the statistics of which we have covered so far in EFL. And my expectations for the day when I wrote this, which was around 3 candles back from where you're currently seeing it, was for a pullback to the high of the hammer before returning to test the weekly open. And of course you can see that price under the heading of key levels on the buy side, and again the reason I want the trade there. So the order's in. As you can see, the blue line is where I'm bid at the high of the hourly hammer. The red line is my stop, which is underneath the low of the hammer, and the target is the weekly open, which is at the green level. Now, this trade took quite a long time to play out, around about 3 hours. So what I'm going to do is I'm going to speed up the recording, and then I'm going to slow it down and narrate at certain points. So it's now just under 5 minutes until the top of the hour, and it looks like I've missed the fill and another hourly hammer is forming. So I decided to take action and wait until 10 to 15 seconds before the close of this current candle to make sure it was indeed a hammer, and then put a stop entry to take me in if it breaks the high of this hammer into the potential move higher. I decided to move the stop on this trade from underneath the original hammer low to underneath the thrust candle that closed through the hammer high. Now, the reason I didn't put the stop underneath the current hammer that I'm about to try and buy a break higher from is that I didn't want to risk stopping out if the market decided to move lower and test that original hammer high. So the R diminished slightly, but I was okay with that. And you'll now see the recording will jump to the point at which I'm getting filled on this trade. So you can see now price has broken above the previous swing high. It has actually swing failed there, and I was fully expecting at this point that we'd come back to test the high of the hammer that I've got long from, so essentially my entry point. You will see that I move my stop up underneath the low of this hammer to start reducing risk, but Again, you can see that I'm not trying to move to break even. I'm still prepared to take a loss on this because I believe in the trade, and I'm placing my stop based on where I think I'd be wrong, not based on P&L. You can see over on the plan that I'm recording what I'm doing as I'm going along, so I can refer back to it if I need to later. And that was it, target hit, and a winner of 1.58R.